Welcome to our another topic, GST. It was announced on 12th of this month and it is being implemented from yesterday, from 22nd. And of course, the government projecting it as GST 2.0 reformation. But it is good that definitely the reduction of prices, reduction of GST tax, always welcome, because even one percentage of reduction in the budget of the poor and common man, definitely we should have welcomed that. But as far my knowledge is concerned, is it really sufficient, the reformations they brought down? Maybe that we have to check. Are these reformations which they promoted, or maybe they proposed in 2025 GST 2.0? Let us see exactly what happened. Are these reformations are sufficient or not? See, GST 2.0, two slabs, one big reform. That's what they're promoting, like two slabs, and it is a big reform they're promoting it as. And the GST 2.0, they're named it as 2.0. And they say that all the essential goods, they're giving it for 5%, and from all the standard goods, they're imposing 18% tax, and luxury and sign goods, so they're giving as 40% tax they're imposing. So this is actually the present reformation which they call it as 2.0. In general, if you go in details, daily usage items, earlier it used to be few items on 12% tax and few on 18% tax. So both the goods they brought down to 5%. And the footwear, it used to be 12% earlier and they brought down to 5% now. On food and groceries, it used to be 12% and 18%, few items on 12, few items on 18. The both were brought down to 5%. And fashion goods, they brought down to 12%. Earlier it used to be 12% and 18%. Now they brought down to 5%. So home appliances, it used to be 18 to 28% earlier. They brought down to 18%. So the beauty and personal care, it used to be 18% earlier, they brought down to 5%. Consumer electronics, they used to be 28%, now it is 18%. So these are the reformations which they brought. They call it as Diwali tax gift for common man. Festival bonanza, something the government is promoting like that. But if you see GST 2.0, all the Indian breads, earlier it used to be 5%, they made it 0% now in GST 2.0. Pizza bread, they used to be 5% earlier and now it makes 0%. Pre-packaged and labeled chana or paneer used to be 5% earlier, now it is 0%. Now ultra high temperature milk used to be 5% earlier, now it is 0%. So life-saving drugs and medicines, it used to be 12% earlier, now they brought down to 5% to 0%. So these are the items, they made it 0% slab. So there is no tax on all these products. Earlier it used to be taxed, now all are exempted now. So this is one reformation they brought. But is this reformation sufficient? That there are some problems we can find out of this 2.0 reformation. One is government unable to pay states GST compensation share. You know, the earlier the government, the GST, the income they generate from the GST on the share, whatever that entitled to the states, it is to go automatically to the different states. Now the problem is that they brought down all the GST rates. Now this is going to affect on the state burden. It's going to affect on the income of the states. See, earlier, especially those non-BJP states, these states used to depend on the will and wish of the Prime Minister. See, that's what so many allegations, like Tamil Nadu is saying that Narendra Modi ji is not giving us fund because we are against BJP, so he is not releasing fund. And Karnataka is saying that they're not giving funds to Karnataka state. And like this Telangana, so wherever non-Bharatiya Janata Party led states, ruled states, they're releasing that Narendra Modi ji is not giving them grants, money. But at least this GST is to go automatically, because this is automatic fund refund. So this GST, it is not that will and wish of the Prime Minister, it automatically goes to the different states. Now, out of that fund, there is a slash now. There is a cut because of this GST reduction of the. So the central government failed to address this problem. It's going to affect, definitely it's going to affect the states, especially where non-Bharatiya Janata Party, parties are the ruling there. And they said the overall there is to be 2 trillion rupees is going to be overall loss to the states. 2 trillion rupees is going to loss to the states. And 15 to 20% revenue loss for each state it is going to be. And its proposal, there is a proposal to levy over 40% on sign goods and create separate slab for environment harmful manufacturing. Right? So this one thing we understand, that states are going to lose 2 trillion amount. And this 1.1 and 0.2, look at this, food inflation. Now because of this 2.0 GST, the budget of a common man, they're going to go, benefit 1 to 2% of their budget savings, because they reduced all the food items, the tax on the food items. They're going to save to 1 to 2% of their budget, total budget of consumption by this common man. From this GST, they're going to get that 1 to 2% benefit. But look at the food inflation. The food inflation already reached to 6 to 8%. See, these are all the red marks are food inflation, and this is a normal inflation. If comparatively the normal inflation, the food inflation is too much of high, escalating. So this hike in the food inflation is almost greater than the normal inflation. So when the food inflation is escalating and hiking too much, then just giving 1 to 2% of benefit from GST 2.0, it's not going to help the poor people anyway, because already the price increased to that means that the vegetable, say for example, the vegetable price increased 8 rupees. Because of this GST, you are giving him 2 rupees benefit. That's still 6 rupees burden on the poor people. So I think this is going to a burden for the poor people. They should have done even more better to this poor and common man. And impact of GST on few industries like real estate, education, small vehicles, luxury goods, also it's going to impact. See, the overall there are 200 items they brought under this GST. But if you look at the critical sectors like real estate, it is still stuck at 18% for under construction properties. Education services, now they exempted education services, they exempted from GST, but they are not providing any retrospective relief. That's going to be burden on the education. Small vehicles, 5%, they brought down to 5%. But remember, they're going to impose heavy road tax. If they added road tax, so then it's not going to help them anyway, because they increase road tax and tax they reduce to 5%. So then maybe the impact is very less on the small vehicles. Of course, the 40% slab on luxury goods is progressive, but doesn't address inverted duty structures in textiles and electronic fully, leading to ongoing input tax credit blockages for MSMEs. And there one more problem with this GST 2.0 is implementation challenges and compliance burdens. See, the business must pass on benefit immediately, but working capital, see, it's going to affect on working capital, because overall this is going to help the large farms comparatively with the small farms, because they are going to see they're going to 90% of provisional relief refund promised. Even though despite that 90% of provisional refunds promised, see, these small traders with the digital filing, they made it mandatory for digital filing for the small traders. The refund is going to take too long. When the refund is too long, then they face working capital problem. The shortage of working capital, and it's going to impact the overall business, and the small business people, they struggle, and it's going to benefit only the bigger companies. And a revenue leakage also could negate gains. Around 48,000 crore shortfall might lead to future hikes, especially for the small traders. This is going to be a big problem in case of small traders. And our broader economic and equity gaps also, there are some problems. The reforms prioritize consumption-led growth, but they're ignoring regressive elements of GST, where the poor man is paying higher than the rich man. See, consumption, see, when you talk about consumption, the poor man will spend more on consumption comparatively with the rich man. So the poor man is going to pay more taxes comparatively with rich people, because see, the GST is based on the consumption, not on the income. Sometimes the poor people, their income may be 100 rupees, but to run their family, they have to spend 150 rupees, and then still 50 rupees shortage for him, and he has to take loan here and there and then survive. The man who is having 100 rupees has to consume 150 rupees, and it is a burden for him. So they are not capability of the poor man, capability of a common man. They are not taking that into consideration. They are just on consumption, they are imposing the tax. It's going to affect poor and middle class people. But when it comes to rich people, their income will be more than the consumed amount, and then they will not have any much problem. So this also they need to address, but they fail to address this, what I understand. And if more specifically, we can understand based on few goods. This is the impact overall we can understand. Essentials like packaged goods, earlier it used to be 12% to 18%, now it is 5%. But it's too narrow. But they excluded many staples like pulses. At 5%, there no cut on the pulses. Appliances, refrigerators used to be 28%, but now it 18%, 10% drops. Helps middle class, but not enough for rural adoption. But this is not going to help the rural people. And insurance, health and life, 18%, now made it 0%, good step. But remember, it's not going to aid for out-of-pocket healthcare costs, 60% of expenses. Luxury cars, 28% plus cess. Now they made it 40%, they increased too much net reduction, but still punitive dozens per manufacturer. State compensation, 5-year term ended, no extension. Leaves states with 1 to 2 lakh crore gap annually. So this is what actually the entire GST reforms. So we will welcome the reduction of the GST, but still there are lapses. The poor people might have, they should have done much better than this. They might have thought about poor and middle class people even more better way. They should have done it better way, what I say. Thank you. Namaskar.